Welcome everybody to a brand new video. Quite a while ago, I made a video talking about investing and kinda my passion for investing and my plans to make money and build my own wealth in the future. And today I wanted to revisit that topic. I want to talk about investing, making money, and reading. You probably clicked on this video because of the title and thumbnail, because today we're going to be talking about The Intelligent Investor by Benjamin Graham, a book that I recently finished. I finished it last Friday, and this is probably the most incredible book I have ever read in my entire life. Now, granted, that's not saying a whole lot because I don't like reading. I'm not very big into reading. As a kid, I hated reading in school. I hated reading assignments. In fact, if I was given reading assignments in school, I just went, great, no homework. I just don't have to fucking read the thing. I could just read along in class. However, even though I have a huge despise for reading and I don't like it at all, it was completely different when I read this book right here. I bought this book a long time ago, probably a year ago when I was still in school, or... There's a lot of thunder. This is Dublin. We don't ever get thunder. Dude, what the fuck? Dude, I'm gonna die. I don't want to die yet. I haven't made a milli. No, but anyway, as I was saying, even though I had a huge despise for reading, it completely changed when I read this book. I bought this book over a year ago at this point because I was just getting into investing. I would say the Christmas of 2017, I started playing around with the idea of investing my money, the idea that I could use my money as a tool to make me more money, which just really appealed to me. The idea of making money without actually doing physical work seemed really appealing to me, and so I started investing in cryptocurrencies. And in just a few short months, I learned that cryptocurrencies probably weren't the best investment I could make. Now, I'm not talking shit to anybody out there who invests in cryptocurrencies. Listen, if you think cryptocurrencies are the future and you want to invest your money because you see huge potential with cryptocurrencies, do you, man. You should invest in whatever you think is going to be the future. However, personally, I don't really see the value in cryptocurrencies, which is going to come up a lot in this video. Because of this book, we're going to be talking about value a lot. Oh, and there we go. It is lashing raining outside. I fucking love it though, because I'm not doing anything today. I'm staying inside. Anyway, as I said, reading started to completely change for me when I bought this book. As I said, I started off investing in cryptocurrencies, but quickly came to realize that investing in cryptocurrencies is a pretty risky decision because it is based on supply and demand. You will be able to sell your cryptocurrencies for whatever amount someone else is paying for, which basically means that you are investing based on speculation. And I learned very quickly in this book that speculating is a horrible idea when it comes to investing. It's something that I completely avoid now whenever I'm investing. Nobody, and I mean nobody in the history of building wealth has been able to accurately determine what the market is going to do tomorrow or in the short term. Trying to build wealth based off of speculation is pretty much impossible. Nobody has ever done it. It's not reliable whatsoever. You can do it in the short term, sure, but when it comes to the long term and something that is actually a reliable method of building wealth, speculation, stay the fuck away from it. You should speculate as little as possible, if at all, when it comes to investing. When I started reading this book, I started to actually like reading, which was so surprising to me because, as I said, when I was a kid, I fucking hated reading. I never wanted to read whatsoever. I fucking despised it. But this book completely changed that. It is completely different when you are reading a book for yourself than if someone is giving you an assignment and forcing you to read. When you are actually doing it for yourself, when you're reading something with the sole intent of educating yourself about something that you actually like or something that could benefit you in the future. For example, this book, this title isn't clickbait. You can actually make millions from this book. This book will teach you how to make millions of dollars. You can seriously make so much money from what this book teaches you. If you guys don't know who Benjamin Graham is, I don't know if you guys just saw that, but I'm starting to get a little bit scared because there was just a bright flash that actually rocked me. Like, you guys know what happens when thunder comes. It just, like, it shakes you a little bit. But anyway, the person who wrote this book is Benjamin Graham. And if you don't know who Benjamin Graham is, he is widely regarded as the greatest investor of all time. And I'm sure a lot of you guys probably don't know who he is. I didn't know who he was until I started reading this book. But one person I do know is Warren Buffett. And I'm sure a lot of you guys know who Warren Buffett is because he's still alive today. And he's widely regarded as the greatest investor of our time. And if you don't want to take it from Benjamin Graham, take it from Warren Buffett, who actually has a quote on the front of this book. By far the best book on investing ever written. Now, I'm sorry that my book isn't in great condition. As I said, I had it for over a year. A lot of its time was spent in my bag, so as a result, it's not in great condition. I actually have sellotape right here so that I could keep the corners together because I didn't want to lose a little bit of this quote. But regardless, if the best investor of our time, Warren Buffett, says that this is the best book ever written on investing, then that means that we should probably listen to him and give the book a read. And I was skeptical at first because I was like, you know, how can a book, something as simple as just reading, make me better at investing, teach me how to make money? Because I was thinking to myself, it has to be more difficult than that. You can't just read and then all of a sudden know what you're doing. And this by no means is me saying that I know what I'm doing in the stock market to the same extent that Warren Buffett does. I'm not saying that I'm some mastermind, that I know how to invest and I can crack like 20% deals every single year. That's not what I'm saying. But what I am saying is that now that I've finished this book, I am way better of an investor than when I first started the book. There are concepts in this book and ideas and tips that you will not be able to find on the internet, or if you do find them on the internet, or if you find them through word of mouth, you will not get as much of an in-depth view of how to apply these tactics on investing in the stock market. We're focusing on stock market investing. We're not focusing on like real estate and stuff. And there is some talk about bonds as well. So if you are interested, you know, you can look up information about bonds in this book as well. But basically, this book just covers value investing, the topic of value investing. And what value investing is when you invest in a company that is undervalued. You look at the company's assets, you look at its liabilities, you look at its balance sheets, you understand the business as a whole. You actually read the annual reports and actually get an in-depth view as to what the company is doing, how the company operates, and based off of that information that you have and the numbers that you can find online, you can accurately or somewhat accurately determine in your own head what is the true value of a business, or what is the true value of each share of a business, or the stock price. Whenever you look at a stock price, you can determine if it is overvalued or undervalued. Obviously, if it's overvalued, you don't invest in it because you don't want to pay too much money. But if it's undervalued, you obviously want to hop in with both feet and buy as many shares of the company as possible, because most likely, if the company is a strong company and it's simply just an overreaction in the market and the stock price has actually taken a dip, you can invest and have a pretty good margin of safety knowing that this is a strong company and they're most likely going to recover. Like, you're really not taking a risk when you are investing your money in an undervalued company. Now, of course, there's always risk when investing. No matter what, even Warren Buffett, the greatest investor, in my opinion, of all time, he can still make mistakes. There was a company that he invested in, I don't remember what company it was, but he was convinced that this company was really amazing and he thought it was undervalued. So he invested a lot of money, and he spoke in an interview himself about how the company was undervalued. He really loved what they were doing, but as soon as he invested his money, it's like they flicked a switch and the company just went to zero. They completely failed. So this doesn't deter you from all risk when it comes to investing. However, it deters you of a lot of risk. One important thing when you're investing your money in a business is to not focus on the stock price, but to focus on the business, to invest in the business itself. Think of yourself as a business owner, because that's exactly what you are. I invested my money in a few companies at the moment, and I am technically an owner of those companies. It's not braggadocious for me to say that I'm an owner of Coca-Cola. I'm an owner of Apple. I'm an owner of Irish Residential Properties. I'm an owner of CNC Group. These are companies that I actually own. And it's factual for me to say something like that. I invested in Coca-Cola. I invested in Apple. I'm a part owner in those companies as a result. It's a complete change in mindset. It completely changed the type of investor I am. Previously, I would invest just if the price was low. But just because the price is low doesn't mean that it's a good investment. You have to look at the business and understand, why is that price low? Is it undervalued? Did the price go low because there's something fundamentally wrong with the business? You don't know these things if you're just looking at the price. However, if I look at a business and I really like what they're doing, and I go over to the stock price and I notice that the price is really low, I'll think to myself, wow, this company is undervalued. I think that there is a lot of value in this company. I think the assets that they hold are really valuable, but for some reason the market isn't reciprocating that. So I might as well buy this company because it seems like it's a good bargain. Another thing that I learned from this book is discipline. Do not, and I mean this, do not buy a share of a company or do not buy part of a business and sell it for a lower price than what you bought it for. That is a huge mistake. If you buy shares in a company and the price goes down, buy more, as long as the company is still as valuable as when you initially bought it. When a company falls down in price, say 10 or 20%, take it as a discount. Take it as like a Black Friday sale. You are basically able to get the exact same company for a cheaper price than you previously bought it for. And then hopefully once the market corrects itself, you will be able to take home that profit. Now, personally, the type of investor I am, I don't buy stocks with the intent of selling them in the future. Basically, I don't invest in growth stocks. Growth stocks are when you buy a stock in hopes that the price will go up. I don't like doing that because I cannot predict what a company is going to do in the future. That is speculation to me. What I like doing is I like investing in undervalued companies that pay dividends so that I can get paid consistent cash flows every single quarter. That is something that I'm really interested in. One day when I have the money, I would love to get into real estate. I would love to buy real estate properties. And one thing that I love about real estate, that is a reason why I want to get into it, is because you get paid every single month rent payments from the tenants that live there. So basically, I try to take the stock equivalent of that. I invest in companies that pay dividends. Every single company that I invest in pays a dividend. If the company doesn't pay a dividend, 99.9% chance I will not invest in them. Because at that point, for me, it's speculation. Unless I'm investing in the next Apple and I read their annual reports and I notice that, holy shit, this company is worth like tens of thousands of times what the stock market price is currently offering, then of course I am going to invest in a company like that. But when it comes to well-established companies such as Coca-Cola and Apple, I invest in them because they pay dividends. I love the idea that I can own shares of a stock and I don't actually need to sell it. I can just keep making money every single month or every single 3 months or 6 months, depends how often the company pays a dividend. I love the idea that I can have passive income coming into my brokerage account and into my wallet every single few months without actually doing anything. They're basically sharing their profits with me. That is fucking amazing. I'm not going to keep this video too long, but I want to talk about another thing that I learned from this book, and that is dollar cost averaging. Basically, if you're investing in a company or you're investing in the market as a whole through index funds, you should use a tactic called dollar cost averaging, which basically means that no matter what happens to the market, no matter what happens to a company, as long as its value remains the same through its annual reports and the amount of money that they make every single year, etc., as long as circumstances stay the same, you will invest in a company every single week or month or however often you want, no matter what the market does. If the market goes up, you invest. If the market is staying solid and flat, you invest. If the market goes down, preferably you would want to invest more aggressively at that point. The idea of dollar cost averaging is that no matter what happens to the market, if you are consistently putting money in over a long period of time, your money will average itself out. Say if you bought shares of a company or an index fund that was overvalued, and you also bought shares of a company that was undervalued, or a company that was simply just staying level, those differences in highs and lows will average themselves out, and hopefully you will pick up a company or you will pick up shares of an index fund for a reasonable price. And hopefully they're paying dividends, because if they are, then you're just going to keep receiving payments over and over again, and then you can also reinvest those dividends to make more money in the future. I know I just went into a lot of technical terms, and some of these terms you're not going to understand if you haven't read this book, which is why I really suggest to anybody trying to be successful in the future, anybody who wants to invest their money and is looking at going into the stock market but has absolutely no idea how to do it, the same way that I had absolutely no idea what I was doing when I first got in, pick up this book. I guarantee you will learn something. You will learn a lot of fucking things. Unless you're already Warren Buffett, you are going to learn so much valuable information. For $20 to $30, the amount of valuable information that this book has is just, it's insane that I can pick this book up for $20 to $30 and learn how to make millions. I'm telling you, if you want to be successful, if you want to learn how to invest, pick up this fucking book and read it. I don't care how quick you read it. I don't care if it takes you 1 week, and I don't care if it takes you over a year like it took me to finish this book. When you finish it, you will come out a completely new person, and your mentality towards investing will be completely different. If you simply don't want to spend the time or the money to pick up this book and read it, I can give you easy advice on how to get average returns every single year in the stock market. Just invest in index funds. Every single week or every single month, have a set amount that you're going to promise yourself that you're going to put into an index fund, and do that no matter what. If the market is high, if the market is low, just constantly invest in an index fund every single week, every single month, every single year, and reinvest your dividend earnings, and you will be able to make about a 9 to 10% return every single year without doing much work. 9 to 10% return every single year isn't even bad. That's amazing. Imagine investing $1,000 and coming out at the end of the year with 1,100 without doing any work. I've rambled a lot in this video, and I've talked about a lot of technical things, as I said earlier, but all I want to get across is that you need to read this book. If you want to make money, if you want to become rich, this is one of the best investments you will ever make. Investing in education and your own skills is something that nobody can take away from you. No matter what happens to the markets, if you decide to pick up a book, if you decide to read it, the abilities that you have in yourself are things that no matter what happens to the market, you will always have. You should always invest in education. It's never a bad investment. And this is one of the pieces of education that I seriously recommend. The Intelligent Investor by Benjamin Graham. This is the greatest book I have ever read in my entire life. It has taught me so much valuable information, and it has made me a better investor. In fact, ever since I started really getting into this book, and ever since I started investing when I opened up my brokerage account a few months ago, I've been doing quite well. In fact, I've had companies that have went up to 18% returns. Now, I'm not saying that 18% is a reliable return. In fact, Warren Buffett himself said that anything past 12% is basically just dumb luck. So I'm not going to brag and say that just because one of my companies jumped up to 18% profit, I'm just all of a sudden a fucking mastermind. I'm the next Warren Buffett. That's not what I'm saying. But all I'm saying is that ever since I opened up my brokerage account and I was educated because of this book, I have been seeing pretty good returns. I'm in a pretty nice profit at the moment, and that's only in the first few months. And the only thing I'm hoping for now is that there's going to be a huge crash in the market, because when market crashes happen, you can pick up companies that are so valuable for pennies on the dollar. And so that's what I'm hoping for. I'm hoping that another recession happens or a stock market crash or something. I would love to be able to pick up Coca-Cola in its current position at like 50% off. That would be fucking amazing. But you know, who knows what's going to happen to the market. This entire video, even with all of the information that I have just spewed and thrown up towards the camera right now, this video cannot explain and it cannot do a justice as to everything that this book has taught me. If you really are serious about becoming better as an investor and being more intelligent and being a more enterprising investor, you should definitely read this book. Absolutely 100% 10 out of 10 book. Fantastic. I passed this book on to my mom, actually. She's going to be reading it as well, because as much as I try to explain to her all the different concepts and how to invest and stuff like that, I can't explain it as well as this book can explain it. So I basically passed it on to her, told her to read it, and hopefully she'll come out of it with more knowledge than when she first started, the same way that I did. And I can definitely say that this was one of the best purchases I ever made in my life, because I've actually gotten results. I didn't expect to see such amazing results in such a short amount of time just from this book. Anyway, I have talked enough. I need to wrap this video up here before I keep going on about how Warren Buffett is just fucking amazing. I love that guy. The Intelligent Investor by Benjamin Graham. Fantastic book. Go pick it up if you want to learn how to make money. But anyway, that's everything I had to say. I'm going to wrap this video up here. So yeah, guys, that's pretty much the end of the video. If you guys enjoyed, make sure you smack the like button. If you want to stay up to date with my content, please be sure to subscribe. I'll have my last video in the corner. If you haven't checked that out already, definitely make sure to check it out. Hope you guys enjoyed. Thanks very much for watching. Peace out.